Hey guys, welcome back. Hope you had a good week in the stock market. It's Friday, June 18th. We're gonna look at GME today. We're gonna look at the market, look at crypto, banks, options plays, and how I'm setting up for all of the above. So, welcome back. Sub up, like up, comment down. Happy money sticks around. It's finally happening. Maybe this isn't the short squeeze on GME you were hoping for. You're like, I thought short squeeze, man, was supposed to go up. We're down 3%. Yeah, no, that's part of it though. That's all part of it. What we see on the SPY here is finally turning bearish. Finally seems to be in a correction phase. And this correction could lead to a significant drop. We thought it was happening back here and it did. And then it bounced up. Powell did some can kicking, and basically we came up here and then started making all-time highs on red days. So this little move here was just the last final little push, I believe, before big correction. How big? I don't know. I don't like to have price targets. If you correlate it in with GME and everything that's going on, could be large. Could be very large. As well as the banks. We've had these bank puts for weeks now. And they were kind of just YOLO type. They're not YOLO. So you have your probability. You've got your probability, profitability, probability. There's a triangle. There's a triangle basically. So my probability of my plays making a lot of money is very low. However, my risk is low. But then my reward is high. So yeah, it's risk, it's probability, and then whatever else I just said. So basically my options are way far out of the money and I've got a lot of time. So very low probability that they will be very valuable. However, if they are very valuable, it's large returns. So low probability, low risk, high profitability. Right? Does that make sense? Anyways, if you played more the short term on it, you could have done well the last couple. Let's see, this last week, honestly, it's just downturn. And then yesterday was a big day. And then today's a big day also on pretty much all the banks. So we've got Bank of America. We've got Wells Fargo puts. Today opened up some Credit Suisse puts. Typically, I don't like to open them up on red days, but yeah, oh well. And as well as the overall market. If we look, so this is kind of what we've been saying. The market's gonna have to contract quite a bit, and the capital is gonna have to come out of the market to basically cover GME. And I think we're starting to see the beginning of it. That's surely what it looks like. Today was a quad witching, which is playing into it somewhat maybe, but yeah, this to me is good. This is a healthy, even if you think, oh, this guy just wants GME to go up so he wants the market to crash. Not the case. The market needs to correct regardless a lot. It doesn't have to crash, and have to do it violently, but it probably will. This move very well. We might have a little bounce and it might slowly come down, but at some point I think it's going to get pretty crazy once we start seeing hedge funds going bankrupt, banks going bankrupt. I think the market will, the velocity will pick up much more velocity. So, and my thought was GME typically moves with the market. The only time it doesn't is when it gets a lot of volume and velocity, and then it kind of makes the market go down. We've seen that a lot. I say this almost every video. And what I thought might happen is GME will go down with the market for a bit. Because like I said, it follows the market, and we're seeing that, and we saw that even today. So it kind of just followed the overall market. Super low volume. Once any volume comes in here from hedgies covering failed delivers or whatever, this thing inverses hard. Not only does it inverse, I think it causes the market to go down because they're pulling from here to give to here. So when it's low volume days like today, it's just going to kind of cruise around with the market. So that being said, the market next week probably keep coming down. Might have a little bounce on Monday, little consolidation, but I think it'll keep coming down, and I think it'll accelerate once we start seeing more of what's actually happening with the banks and with hedge funds and with this over leveragedness and the reverse repo, 750 billion or whatever, and the interest rate that Powell changed on that and how that will affect things. Once that all kind of starts to come out, the market's going to get scared, and then we're going to see some violent drops. For now, though, this is just kind of the beginning of the correction, and all is kind of well. Whatever's going on behind the scenes, people don't know too much about. Just the little surface stuff that we see. GME, on the other hand, we'll take a look here. On the daily chart, it is a bear flag for sure. MACD has crossed over. This has been bearish. I've been saying it since here. Big red candle, below the 9 moving, engulfing candle. RSI is just, it's flat, but it's weak. And I thought maybe we'd hold support here for a bit. And we have. It's actually surprising. So we had puts, so we sold on that. Market's about to close. Next week, though, I'm not so sure, because especially if the market sells off Monday, Tuesday, this is kind of my prediction, is GME is going to actually come down Monday, Tuesday. I think we'll have more of a correction on GME, just coming down with the market. And because next week, Monday and Tuesday, there's not many failed covers that they need to make. I believe Wednesday is the bigger day, and then maybe even Thursday and Friday. So I think GME will probably come down Monday, Tuesday. I mean, it could hold this support those days, but it kind of depends on the market. If the overall market, I think, is pretty red on Monday and Tuesday, I think GME will come down with it, and then I think we'll probably see the support 180. We'll probably come down and test that. See if we hold there. If not there, we'll probably come even all the way to this 135, and that I think will only happen if the market's really pretty red. But then the failed delivers and all that on Wednesday should kick off. If Ryan Cohen bought the 5 million shares that he offered, or if he just sold them to, on the open market, and he announces that that's over, that he sold them, that basically the offering is over, then that will be very bullish, and he potentially will come out with that news next week during these failed deliver cycles, because he's a genius. That's right, a straight genius. So that's kind of what I'm predicting for next week, as well as the overall market. Oh, and then also we've been talking about banks, market, and crypto all selling off. Look at what happened today. Look at this. Crypto's been in a downtrend for a while. Big down day today, 7%. I'm just curious what this will do over this weekend. Crypto might have a big dump over the weekend. Crypto down 7%. Overall market down. This is a pretty big move. 1.5. Nothing too crazy, but 1.3 is pretty large. We haven't had a big candle like this since here, when it really kind of turned directions. But the big gap down, that's also big. And then the banks. So all of these things that we've been talking about that are going to come down are it's finally happening. They're finally coming down. VIX has gone up, and GME hasn't shot up though. So this is kind of what, it's going to probably all go together. And then once we get maybe a lot of, it's probably got to come in with some buying pressure on GME, which would be the fail to deliver covers or positive news. And then we're going to start seeing stuff getting covered, and then it will inverse and probably cause the market to come down even more, because more capital will be sucked out of it and into the black hole that GME is. So that's banks, crypto, market. It seems like it's happening. It definitely does. Today was boring and flat, but this could be the calm before the storm. Very well could be. So let me show you the plays we did real quick. What did we do today? Real mellow today. I opened up 41 Credit Suisse puts for September 17th. Let me show you these guys. It's let's see. So only spent 205 on it. Is that all I spent? I could scale into it. Today was red on it, so if it has a bounce Monday or Tuesday, might scale into it. This is so far out of the money that they're basically worthless. Kind of trying to do the same thing I did with the Bank of America play. I got those for 3 cents. They're at 8 cents now. But it gives me exposure to a huge drop, and if it is, it'll be good. If Credit Suisse goes bankrupt, this will be 28,000. Don't want that to happen. Don't even want to go bankrupt, but just in case. Bank of America, these 22 puts, yeah, The spread on them is a little further. These haven't really moved much with the move today that we saw in Bank of America. Same with Wells Fargo. They're just too far out of the money. Could have made money on the short term with them for sure. But just being these are so far out of the money, the move today really didn't affect the option premium on these. So we still got quite a bit of time. Wells Fargo one, we only have a month actually, but the and that maybe is all we need. This correction, this whole thing might only be a month from now. It's 6/18. By 7/18, this could be all over. So we shall see. We'll see how far they can prolong it, push it down the road. New policy, new regulation, however they're going to do it. The reverse repo thing, there was a great DD about how that actually shows that there is a liquidity problem, I believe. I can't remember. I read about it, but I was like, that is interesting. So yeah, we'll see what happens. SPY put today. We got these. This is for a month, 360. These are up 58% today, which is nice. And then we've got the UVXYs that I got yesterday, actually. A lot of these options are expiring today. These are 76 calls. These are up 73% today, actually. That's kind of crazy. So UVXY, it bumped up some. UVXY is a leveraged ETF, kind of inverse the market as well as with volatility. Only 1.5 times leverage, but you add that leverage on with option leverage, and that's a lot of leverage. That's like almost as much leverage as the banks have right now in hedge funds. Anyways, hope you guys had a good week in the market. Oh, the puts we sold. So I sold puts on GME. I didn't go up GME plays. Remember those puts we sold? That's right. Let's see. There they are, somewhat. Those puts we sold. So I bought them back, bought to cover. I would have left them, but I was like, I think we're going to correct pretty big next week first. So we did stay above that 210 though. I had the 210 puts. I had 9 of them. So I spent almost, let's see, like it says 1,000. I think I spent $900 closing it out. But then to open it, I received 7,700. So profit on that was like 6,800 on that selling premium play. And pretty much all that premium I put into naked calls. So kind of like we were doing before with credit spreads, funding my naked calls. Now I'm selling puts, funding naked calls. So both are bullish, which doesn't, if you're not bullish on something, it doesn't make sense not to hedge it. But both are bullish, and yeah. But it's kind of a nice strat. Now I have a lot of exposure to the upside for next week, and on Monday, depending on what the charts are showing me, I will sell puts, or I might wait till Tuesday if it doesn't look strong on Monday. And then I'll probably sell those at the money or even out of the money, just to get more premium, especially if I think there's upside. And then I'll also maybe scale into these some. As you see, the premium on these just got clobbered today, mostly because I bought them on that big candle yesterday at close. Worst time to buy when you're excited. Best time to sell. Best time to buy is when you're bored. So here we are. Yep, these 260 calls are expired, worthless. That new DD on the fail to deliver, where it's happening every day, I like it. Kind of threw me off a little bit. Not saying it's not true, but I'm not too concerned if the price action on GME is going to go up 3 or 4 or 5% in a day, if it's going to come back down necessarily. I mean, I guess if you're day trading, that's good, but I'm not really day trading this. I'm just doing options for the most part. So shares, I'm just buying and holding. But anyways, for next week, these are down. These 325 ones, around that $300 range, these options had the most leverage. If you don't know what that means, you can look it up. 500 calls, we have 5 of them. 670, we have 8 of them. Scroll down about half. I did average into these 325s a little bit. So we have, see, our cost base on is now $500 or $5.30. And the 500s are, cheaper. And the 800 or the 670s are even cheaper than that. So that's 325, 500, 670. If we see price action, so the failed delivers on Wednesday are going to be, I think, 75,000 GME failed delivers, and that's quite a bit. And we are also in a SLD period. Is basically when the hedge funds have to have liquidity, or they will get liquidity called. And so we could see price action similar. Where was it on here? I think one of these days in March were kind of similar. I don't think it was this day. It was actually this day. So could see price action similar to that just on one of the days next week. But then almost every day there's a pretty good amount of failed delivers coming next week. So I might have been early. Monday, Tuesday actually looks pretty dry on the failed delivers. However, if Ryan Cohen comes out with the news about the shares and everything like that, it could go crazy by Monday or Tuesday as well. But just looking at the charts and the failed delivers, I think we're going to be correcting Monday, Tuesday, unless an external event happens. And I think that will coincide with the markets as well, coming down those days. If you haven't, sub up, like up, comment down. Happy money sticks around. Jump on our Twitter and our Discord. And have a great weekend. Chill out. It's gonna be a long one. Monday, Tuesday might be slow also. So, thanks for watching, guys. Appreciate it. Peace out.